Welcome to our comprehensive guide on global tax rates. In this video, we'll explore the tax rates of various countries, their impact on the global economy, and future trends. Understanding tax rates is essential for anyone interested in global finance, as they influence business decisions and government policies. We'll take you on a journey, starting with the historical context of taxation, moving through current rates and case studies, and concluding with future projections and challenges. By the end, you'll have a deeper insight into the complexities and nuances of global tax systems. Taxation has shaped human civilization for centuries. To understand its current impact, we need to look at its roots. From ancient Mesopotamia, where the earliest tax records were kept, to the sophisticated tax regimes of the Roman Empire, taxes have funded armies, infrastructure, and governance. Over centuries, these systems evolved. The medieval period saw feudal taxes, while the 18th century's American and French revolutions sparked reforms leading to modern tax systems. The 20th century introduced progressive income taxes to reduce inequality and fund social programs. These historical milestones help us appreciate today's tax systems. Now, let's delve into present-day taxation. Now, let's dive into the current tax rates across different countries and how each nation's approach varies. Countries like Denmark and Sweden have high tax rates to fund social welfare, while Hong Kong and Singapore have lower rates to attract businesses. These differences are influenced by economic structure, government policies, social welfare needs, and cultural attitudes. For example, countries with robust industrial bases may have different tax approaches compared to service-oriented economies. Government priorities also play a role, balancing social equity and economic growth. Next, we'll examine specific countries to illustrate these complexities and their global impact. Let's start with the United States. The U.S. tax system is a mix of federal and state taxes. Federal tax rates vary based on income brackets and types of income. Additionally, each state imposes its own taxes, income, sales, and property, creating a diverse tax landscape. For instance, Florida has no personal income tax, while California has one of the highest rates, influencing where people live and work. Federal taxes fund essential services like defense and infrastructure, while state taxes support education and public safety. Now, let's see how other countries' tax systems compare to the U.S. Next, we look at Germany. Known for its robust social welfare system, Germany's tax rates fund public services. Individual income taxes are progressive, redistributing wealth to support social programs. Corporate taxes balance competitiveness with revenue generation, comprising federal and municipal components. Social contributions from employees and employers fund health insurance, unemployment insurance, and pensions, maintaining public service quality and sustainability. As we move forward, you'll see how Germany's system compares to other countries, providing a broader understanding of global taxation. Now, let's dive into Japan's tax system, known for its unique reliance on consumption tax. Introduced in 1989 at 3%, it has gradually risen to 10%, reflecting economic strategies and financial balancing. Corporate tax rates are also multifaceted, with national and local taxes resulting in effective rates between 30% and 35%. This system supports public services and economic stability. Japan's blend of consumption and corporate taxes showcases a balanced approach to civic needs and business growth. Next, we'll explore Brazil's tax framework, highlighting how different economies handle taxation. In this segment, we explore Brazil's unique tax landscape, dominated by high indirect taxes like value-added tax and excise duties. These taxes are crucial for government revenue but also impact consumer behavior and business costs. Higher prices on goods and services can affect purchasing power and competitiveness in the global market. This complex interplay between revenue generation and economic effects reveals how Brazil balances these elements. As we move forward, you'll see how Brazil's tax structure compares globally and its implications for trade and investment. Next, we'll examine India's tax system and the introduction of GST. India's tax system has transformed with the introduction of the Goods and Services Tax, GST, in 2017. GST merged various central and state taxes into a unified rate, simplifying the tax structure and boosting economic growth. However, initial challenges like compliance issues and technological infrastructure caused disruptions. Despite this, GST has broadened the tax base, increased revenue, and enhanced market competitiveness. Next, we'll compare India's system to other nations, highlighting the challenges and opportunities it presents. Stay with us as we delve into Australia's efficient and straightforward tax system. Australia's tax system is known for its simplicity and efficiency. Individual tax rates are progressive, ensuring fairness. Corporate taxes impact business operations, with both resident and non-resident companies subject to these taxes. Australia's approach supports a robust social welfare system while encouraging growth and innovation. This balance is crucial for maintaining a high standard of living and economic stability. As we move forward, we'll compare Australia's system to other global tax systems, highlighting unique aspects and common challenges of global taxation. How do tax rates differ between developed and developing countries? Developed countries like the US, Germany, and Japan have higher personal and corporate tax rates to fund comprehensive services. In contrast, developing countries like Brazil and India rely more on indirect taxes like VAT or GST, facing challenges like lower compliance and administrative capacity. Higher taxes in developed countries contribute to stability and robust services but may deter investment. Lower taxes in developing nations attract investment but might not fund essential services sufficiently. Both systems have their benefits and challenges, influencing global economy and trade relations. Tax rates play a pivotal role in shaping the global economy. They influence trade, investment, and economic growth. Higher rates can deter investment, while lower rates attract businesses. Balancing tax rates is crucial. Too low, and essential services may suffer. Too high, and economic activity could stagnate. Competitive tax rates can secure trade agreements. This intricate web of tax policies affects everything from individual livelihoods to global financial stability. As we dive deeper, you'll see how these elements interconnect, driving the global economy in complex ways. What does the future hold for global tax rates? Current trends suggest a gradual increase in progressive tax models to reduce economic inequality, while some nations might lower rates to attract investment. The digital economy may lead to new regulations targeting online transactions. Increased global cooperation could result in more standardized international tax policies. Navigating these shifts is crucial for economic stability and growth. As we wrap up our exploration of future projections, the next segment will delve into the challenges of implementing these tax reforms. Implementing tax reforms faces challenges like shifting political landscapes, fluctuating economic conditions, and varying public opinion. Country X struggled with political pushback on tax reform proposals. Economic instability in country Y shifted focus from tax restructuring to recovery. In country Z, public perception derailed a reform plan seen as favoring the wealthy. Understanding these dynamics is essential for successful tax reforms. Next, we'll explore how these challenges affect the effectiveness of proposed changes and what lessons can be learned from them. An effective tax system can be a catalyst for a nation's success. Properly designed tax policies promote a balanced and stable economy, driving growth and prosperity. Efficient and fair tax collection funds social welfare and essential public services. A society with accessible healthcare, education, and infrastructure benefits from effective taxation. Properly managed tax revenues enhance a government's ability to tackle economic challenges and invest in future development. Tax systems are not just financial mechanisms but integral components shaping national well-being and future. Now, let's move to the final wrap-up where we'll summarize key takeaways. In conclusion, understanding global tax rates is crucial for grasping the complexities of the global economy. We've explored various tax systems, compared their impacts, and examined future projections. By delving into these details, we hope you've gained valuable insights into how tax rates shape economic landscapes. Remember, staying informed helps you make better financial decisions. Thank you for joining us on this journey. Don't forget to subscribe for more informative content. Your learning doesn't have to stop here, there's so much more to explore. We appreciate your time and engagement. Stay curious and stay informed.